Goodness, Wall Street is just out to make fools of all of us. We've had so many up and down big rally days in the last couple days, week and a half. We had a really good performing day yesterday. Then we had the FOMC. Interest rates went unchanged. I think it was kind of largely status quo. Everything was as market participants were expecting it to be. And then here comes this morning, and we just have a monster sell-off. We just had a positive 2.5% day yesterday, and now we have another negative 2% day today. The market just seems to really be unable to decide. It's just taking every day as kind of a new direction in terms of where they want to take it and whether they want to be involved in the market still or if they want to be out. So let's get into it. Welcome back. I am your host, Kyle. Today's date is August 1st, 2024. It's the beginning of a new month, and that could certainly be playing into some of this market action as well. We have a little bit of rotation going on between the end of July, being July 31st, on a Wednesday, happened to be a day with hundreds of earnings going on, the FOMC. There was just too much news to even start to digest all of it. So now we have kind of the fallout effect from that. And I think traders are still trying to make up their minds. Sometimes after these FOMC events, we see it take into the overnight session for the direction to really be determined. And lo and behold, this morning, we've gone completely the opposite direction. We've undone virtually the entire move on indexes that we had yesterday. So I'm going to show you some charts here of the S&P 500. We saw the rally pretty strong throughout the day, pretty consistent buying, and then the FOMC event happened and interest rates went unchanged and market just kind of went flat into the close and even into the Asia session. And then not until this morning, some people are pointing at the ISM manufacturing data, and there was a few employment related pieces of data that came out this morning. I don't think that quite does anything though, other than suggest that interest rate lowering is even sooner on the horizon, such as a September meeting event, than possibly otherwise. So if anything, you would think this data is further pushing the Fed's hand and the narrative that the market needs or the economy needs an interest rate lowering versus keeping this higher for longer status. You would think that would almost cause the opposite reaction and that we would be booming on upwards knowing that relief is on the way. Now, maybe just because we had the meeting yesterday and the Federal Reserve remained adamant that the fight against inflation must continue and that we don't have significant amounts of confidence in that we can start bringing rates down yet, but data is showing more and more signs that we are getting close to that. I don't know, maybe just a little bit of everything. We have a lot of big companies posting their earnings. Some are great, some are just okay, and some are not so hot at all. As well as we kind of have a monthly rotation going on. We have a whole bunch of economic data. I say still just hang tight. Fundamentally, we're still doing well. The economy is still growing. GDP is doing well. Just need to hang in there. Even though we're getting a little bit of a roughing around in these last few trading sessions, I don't think that is justification for panic. So Wall Street is just having their fun, getting their fill, making probably as much money as they have made in a long time. And we're just going to sit on the sidelines, hands off, and not indicate that we're either afraid and wanting to panic sell and get out, or that we're confident that this is, like, at any given moment, the bottom, and try to be knife catching per se, right? If we have money on the sidelines, which we should have a little bit of cash available at all times to be able to take advantages of market downturns. But I'm waiting until at least 10%, 15% of actual drawdown in indexes before I'm looking to inject extra money into accounts. So we're just hanging tight. It's just kind of a limbo stage. We're not that far off from all-time highs, even though some stocks are reacting pretty severely. I think we just need to give it a few more months here, be patient. We got elections coming up, and I know a lot of people are looking at elections as a possible motive for stocks to go up and down. I really don't think that's going to play too much of a part here. So earnings wise, we had Intel today, just got absolutely decimated. After hours, they're down over 20%, trading in the low 20s after having just been in the medium to low 30s last week. Intel says third quarter revenue will disappoint and announced more than 15,000 job cuts, about 15% of its workforce, which is currently just north of 100,000 employees. Sales short by a whole $1 billion. Analysts expect $14.38 billion to be recorded next quarter, and Intel says don't expect more than 12.5 to 13.5. So that is a whopping miss. That is no small number. They have also cut their dividend entirely. Now, a year and a half ago or so, I believe, is when they cut their dividend the first time, and they didn't eliminate it entirely, though. They just significantly brought it down. I think the current dividend is 1.5, 1.6%. And previously it was north of 3% or so, doing much better than that. But this is the first time that they're cutting it entirely since 1992. So I think it's showing a little bit of the possible problem that they're experiencing. They intend to cut operating expenses by more than $10 billion, which will certainly help get them on the right path. But really what it's going to come down to is they need to be innovating immediately if they're going to even have a chance of catching up at all and being able to compete with AMD again here in the next couple of years. Apple is manufacturing their own processor chips, so they're saying, Intel, we don't need you anymore. Qualcomm is making some pretty powerful SoC chips and still making some pretty powerful smartphone chips and dominating some of that space. So Intel just has to find its little niche, be it AI computing, which we already know NVIDIA is taking over that market. And when it comes to servers and server processors and even desktop client processors, which I don't think are too much majority of their income, but it is a factor of it. You have AMD, who is really performing well in terms of performance to price ratios and being able to offer customers a much more competitive solution than historically what Intel has been able to offer. So they're just kind of losing on all fronts, and they do have some massive facilities under construction, like their 1,000-acre Ohio facility that is supposedly what's going to help get them under the 4, 3, and then potentially to 2 nanometer production. But they need to step on the gas pedal on that and batten down the hatches until then and quit hemorrhaging as much money as possible. So they're letting go of some of their extra weight. They're cutting thousands of employees and cutting the dividend, and they're just trying to stockpile as much cash as they can. So if anything, it's definitely suggesting that they see some problems on the horizon, and until that Ohio facility is completed, which is going to be another 3 or 4 years out at a minimum, then things are not going to get better for them. Snapchat also just got brutalized today. I don't really know quite what their issue is. I saw that they announced that they have over 800 million daily active users, which is just a monster number. I mean, you're talking a significant portion of the human race is potentially your daily active user base. And I know Facebook or Meta and Instagram and probably even Twitter maybe even have larger than that. But you would think that Snapchat would at least be able to capitalize on some of that. But they seem to be struggling really hard to to get positive. I don't know if their ad revenue is not making up as much as it should, versus Meta and Instagram, if that type of ad revenue is just significantly more valuable in terms of user engagement and whatnot. But yeah, Snapchat just got totally beat up. And they were here just recently. They had a really great earnings, popped them up. Then they had a bad earnings and they fell back below to this $10 area. Then they had a great earnings and they rallied back up to $15, $16. And now they're back down to $9, $10. So they're also getting thrown into the mixer, and we'll have to see what comes of that. So hopefully no big moves tomorrow. It'd be nice to just have a day of a little bit of peace. And again, I think it's just some of this monthly rotation is going on, as well as we did just come out of the half year mark, and there is some semi-annual rotation that goes on there as well in July. So just lots of money is moving around. News is wild. I'm surprised we didn't really have a lot to talk about on Tuesday, but sure enough, come Wednesday and Thursday and possibly even Friday, it's just nothing short of topics to keep discussing on. So thank you so much for watching. Please consider liking and subscribing if you've enjoyed my content. Your support means so much to me, and I will see you all tomorrow.